Hey everyone, happy Friday, April 29th. We are right around the corner from May, hit May 1st this weekend. And what we've seen is, I would call it some volatility with the mortgage market over the last 4 to 6 weeks. Even if you look back a little bit longer than that, you're going to see definitely an upward trend in mortgage rates. 6 months ago, we were looking at rates in the threes. 2 months ago, we were looking at rates in the fours, and now we are touching that ugly 5% number. I shouldn't say ugly because if you talk to anyone that owned a home in the 80s, they had an interest rate that was probably in double digits. Relatively speaking, the 5% interest rate isn't really that bad. But certainly there's some sticker shock with that. And so for our clients that are out there looking at buying a property right now, they're in a position where they say, you know what, we want to move and we need to move. What are their options? And as interest rates have jumped over the last couple months. So, first and foremost, probably the biggest thing is making sure that you are working with a professional lender that will explain your options. Obviously, online lending options are great. You're probably going to run into someone that is working at a call center. We always work with, we've got probably 5 or 6 really good, experienced lenders that we've worked with and had longstanding relationships with them that we try and connect our clients with a couple of them so that they can understand what their options are. So having a really, really good lender that will ask the questions about, how long do you plan on being in the property? What's your price range that you're comfortable with from a monthly payment, and then also a purchase standpoint, and also building in a little bit of a cushion for them to talk about if you do have to go over ask price with multiple offers, what does that look like? And having that conversation and a good lender on your side can literally save thousands, if not tens of thousands of dollars over the life of the loan. So, very, very critical to make sure you've got a great lender on your side and looking at that. So 4 different options that we're consulting our clients with. Obviously, the first thing is just a straight 30-year fixed. And what does that look like? Is it a good option? 15-year, 20-year option, but looking at what the baseline it would be at a 30-year fixed for that client's scenario. The number two option will be looking at if there's a possible interest rate buy down. And back in the early 80s, we heard about the term points. How much are the points to buy down a loan? And 1 point is 1% of the mortgage amount. So you can actually look at a 30-year fix. Let's say if it's at 5%, you might be able to buy that down to 4.75 or even 4.5 for a point. And the points are what fluctuates on a daily basis. So a good lender will keep you apprised of what those are doing on a regular basis. But from when you qualify or get that pre-approval quote to when you secure property under contract and you go to lock in, those are 2 different things. So it's definitely something you want to take a close look at. So buying down that rate, it might cost you, let's say if it's a couple $1,000s, but over the life of the loan, when will you recoup that to get a good interest rate on that? The other thing too is if you're putting down less than 20%, you're probably going to have something called mortgage insurance or private mortgage insurance for a conventional loan. And some lenders will actually have an option where you can do upfront mortgage insurance or prepaid mortgage insurance. And that's actually a good option too, because that mortgage insurance will typically drop off once you've reached 20%. But if you can pay that up front, it's actually a pretty good option to look at and visit with your lender about that. Your closing costs are going to be a little bit more expensive, but over the life of the loan, your monthly payment is actually going to be much better, more attractive for you. The fourth option, which gets people a little bit nervous, is looking at an adjustable rate mortgage. A quote today from one of our lender partners was a straight 30-year fix was at 5.25%, whereas a 10-1 arm, so it stays fixed for 10 years and then it can adjust after that, was actually at 4.5%. So you're actually saving about 0.75%. Doesn't cost you any more to do an adjustable rate mortgage, but it actually save you quite a bit on your monthly payment. And who would be a candidate for someone like this? Well, obviously, if you're going to be in a home for less than 10 years, that makes sense to look at that as an option. Many first-time buyers, where they're kind of stretching a a little bit and maybe they're at the entry level pay scale for their job, they might look at doing an adjustable rate mortgage because it might allow them a little bit more competitiveness in the marketplace to go up a little bit higher in price, and knowing full well that their incomes are going to be increasing, and they're only going to be in the house for maybe less than 10 years because they're probably going to be moving up from their starter home into something different. So those are a few options that we certainly have a conversation around, giving our clients some insight with it. We've got some great lender partners, so when the time is right and you want to have a conversation around that, certainly reach out to us, and we'll be happy to connect you with one of the great lenders that we work with. Take care and look forward to talking to you soon. Bye now.